Rotimi, thank you for taking the time out to join us. We saw the All-Share Index today extending gains from last week. Are we seeing a shift in sentiment on the part of investors? If one looks at the news coming from the macro economy, issues around the FX, issues around some of the tariffs, increase in tariffs we've seen recently, it would appear that there are more headwinds, as it were, but it looks like investors are maybe thinking differently. What can you tell us?
The current trend in the market is not in tandem with the macro position of the economy. And I think investors are already weary of forced sale or a situation whereby we've not really been seeing responsiveness coming from the market. But when you look at the results that came from the quoted companies in recent times, especially from the audited half-year report of the banking sector stocks, I think investors are to an extent convinced that there is every good reason for them to remain in the market. So irrespective of what is happening in the FX market, the continued devaluation of the Naira, I think investors are just really okay with what it is now. The only thing that is actually adverse to the market right now is that foreign investors, portfolio investors, are not actually in. And I think, to me, it has given a measure of stability because of the periodic upheavals that we see now and then whenever they move in or they move out. So I think having not been participating much in quite a while is quite the reason why we are seeing some measure of stability. And we are not seeing a skyrocketing upward movement as such.
I'd like us to quickly talk about the banks. The CBN, as you know, is set to begin a phased implementation of Basel III and of course, reviewing the current Basel II regulations around liquidity and banks having to adopt guidelines on leverage ratios, capital requirements, and liquidity. Just to share your thoughts, especially on the side of liquidity, we've seen a couple of banks, the popular names, declaring interim dividend. And I spoke to one of, I think it was a tier 2, the group CEO of a tier 2, and he talked about the fact that, look, when it comes to capital adequacy ratio, liquidity, he thinks a couple of them are fine. But just to hear your thoughts on what this means for the banks and what we're seeing in terms of the dividends that are being declared.
Well, I think when a company declares a dividend, especially an interim, is to resound to every investor that we are strong, we are capable, and there's really nothing to panic about. And I think, but again, one major worry is that the capital buffer of 12.5% that has to be put in definitely may not really have been an issue, or with the continuous devaluation of the Naira, is not where it used to be. So invariably, when you value those bonds in dollar terms, they are quite lower than what they used to be. And this is what the foreign partners will actually use to measure their capacity to continue to be able to fulfill their obligations as at when due. So I think my major worry is more to do with the current downward trend of the Naira. And for me as well, again, I believe that there's really nothing much, because most of the Basel III is actually affecting internationally active banks. And I think a majority of those ones are actually standing strong, and I think they have quite enough equity to be able to stand that buffer that is required. So they may not necessarily have to start approaching the market for fresh capital. I think they have enough. The only other thing that may affect them negatively is that since they have to at least make a lot of provision, and also their liquidity ratio has to be well covered vis-a-vis the risk that they expose themselves to, I think they may not really have much fund as such to continue to do the core business that they do. So that may actually affect their profitability going forward. But about their strength and continuity in business, I believe that they are really good to go.
Okay, well, I guess we just have to wait and see how that plays out. So for trading this week, what are your thoughts and what is your forecast? Where will investors be looking for value?
Well, I think the banking sector at least to an extent, for some of them, like Access Bank, like UBA, I believe they've not really enjoyed the kind of traction that we have seen in Zenith and GT Bank. And I think investors may really be looking at that, since also they are declaring interim dividend, and that definitely may pose an opportunity for investors. So I think the banking sector stocks will still readily be the investors' tools. And I believe also that with the price of Dangote Cement and a few others, I think they also may actually be the tools of investors. But for me, I think the banking sector stocks will just carry the day and the week.